Well, hi, this is Jay Arthur, and I'd like to tell you another improvement story, a $1 million money belt improvement story that I worked on. And so I worked with this one healthcare company, and they were suffering from rejected, appealed, and denied insurance claims. You know, so when your hospital sends out a claim to be paid, you know, it either bounces right out, right, it's rejected, or it sits in there and it's appealed because they don't think you covered all the bases, or it's just flat denied. Now, rejected things turned into appealed things, and eventually most of those got paid, even though some of the appealed stuff was out there for 300 days. But the real issue was we're just flat losing money on the denied claims. So the first thing we did was draw a control chart of denied charges month by month. And so we had sort of a little control chart going on here, January, February, March, April, May, and so on. And so on average, they were losing just about $1.1 million a month in denied claims. Now, I don't know about you, but $1.1 million will buy a lot of stuff, right? And so what we want to do is find a way to solve that. Well, what we did was we then took that and started looking into and Paretoing this data. Now, I used pivot tables to help me in Excel figure out where all this stuff was, because there was a lot of line-by-line kind of transaction things. And in the Money Belt training, I'll teach you how to use pivot tables to actually go get and categorize all this kind of data. But I just want to show you the improvement story to begin with. So what did we do? Well, we took and did a Pareto chart. Well, the biggest thing here for denied charges turned out to be something called timely filing. So in essence, you have to file these claims within 30 days, or you're just flat denied straight out. So you can't sit on it forever, all right? So this was like some giant chunk of this. I think it was 89% of the total was timely filing. And then there was a bunch of other little miscellaneous things. But why worry about those when the big dog is this one thing? Well, then what we had to do is look into timely filing. And again, we had to take this down into another Pareto chart. And so when we got into another Pareto chart, we looked at a lot of different ways, but the one that was really interesting was there was one insurer out of dozens, right, that was 64% of the total denied for timely filing. So we took this bar here and turned it into another Pareto chart. And since it's insurance company number one, we actually did a root cause analysis on that. Well, it turns out part of it was in the contract, the original contract with this company. They weren't necessarily living up to their end of the bargain. But the other thing was in processes. And so they actually figured out, well, gee, part of it is how we handle that particular payer. And so what we need to do with this insurance company is handle them more aggressively, more rapidly, and whatever. And so they were able to put in, you know, we diagnosed this on a Thursday, and by Monday they figured out how to put in countermeasures into their process to eliminate denied charges by this particular insurer. Well, meanwhile, they were working on the contract stuff. That was going to take longer. But Thursday they figured out what was wrong, and on Friday they implemented the changes. And this is so simple, all right? And so what happened was they immediately dropped their denied charges by almost, I think it was $380,000 a month. Now that's a lot of money, right? So they went down to 700-something thousand, or 690 or something like that. And so we were able to prove that after the fact, we'd made improvements. And that you have to do this. You have to make sure that the countermeasures you put in place actually drop your problem, right? Because otherwise you're just guessing, all right? And after this, Insurer 1 was no longer the big dog. And so if we drew a Pareto chart of that, there was some other company that was number 1, number 2, and so on. So some other insurer was now a big contributor. But timely filing, because we'd wiped out $300,000, was no longer $400,000. It was no longer the big hitter in this chart. So we had to come back and find look at the next big bar and figure out what to do with it, which I think was, failure to get pre-approval, pre-authorization for these charges. So pre-auth, I think, became the next big bar that we worked on after that. So that's how easy it can be. Just a little control chart of how you're doing over time. So denied charges, and every company has things where they have too many things where they're paying customers for mistakes they've made and things of that nature. And can we reduce it? Can we Pareto chart it and break it out and look for those Pareto patterns, right? And obviously, until we got down to this point, it made no sense to pick a team. Now, this company had actually picked a team, and unfortunately, we didn't always have all the right people, so we had to get more people involved to do the root cause analysis here to come up with the things we needed to fix, and then do a little root cause analysis, implement the countermeasures, and very often they're not expensive, right? They're just process changes. It's not rocket science. You don't need to spend millions of dollars buying new technology most of the time. All right? And then come in afterwards and measure and make sure that we've made those improvements. And that's how easy it can be to use Six Sigma and the tools of control chart, Pareto chart, fishbone diagram to solve 90+% of all the problems that exist in most businesses, since most businesses are mainly service businesses and they have just defect rates, things to fix. Now, the other thing we did was we came back and we actually went to work on this also for rejected claims, right? We found 24 million in duplicate charges that could be resolved. Lots of money was found in this particular process. So I'd invite you, get into your financial systems, figure out what's going wrong in there and figure out how to solve it. And if you need help, we can help you, right? We do data analysis for a fee and so on and so forth. So let us know if we can help you do this kind of analysis, because you can't afford to keep losing $100, $200, $300, $400 million a month. You just can't. It's cheaper to buy us, all right? Just rent us. All right, so have fun and discover how to do Lean and Six Sigma using these three tools, and those will solve most of your problems. Thanks.